Hey team, another beautiful and blessed morning. It's Fabio here and welcome back to this daily market update. Now, a lot has been happening in the world and I want you to stay informed before diving into the markets today because Trump has announced a 90-day delay on tariffs on countries that decided not to go back and hit against him with counter tariffs. That has caused the market to spike up higher, as if we look at the NAS 100, we can see one of the largest daily candles actually in a very, very long time. Actually, the third largest candle since 2008 on the daily time frame. So a lot going on within the world, and let's see what the markets or how the markets are reacting to that. Because as of this morning, we can see that EURUSD has been pushing up higher. Now, the main reason for this strength is still that there is uncertainty surrounding the dollar, guys. Because in the meantime, whilst Trump has announced a 90-day delay on tariffs, he has hit back at China with, if I'm not mistaken, 125% tariff. Obviously, China and the United States being two of the largest global economies, a tariff war is good for no one, or a trade war is good for no one, and this is still causing a lot of global uncertainty. And still, these policies from Trump and kind of like this stance where he's really trying to pick a fight with China is still causing a lot of uncertainty within the dollar itself as well. Therefore, I still see EURUSD as a long and not really as a short as of now. Looking at the weekly time frame and zooming out, we can still see that we have the highs open here, this green box. So what I'm looking to do here on EURUSD is simply trade it from this green lower box where we were and we liquidated the low. We see the reversal to now trade it up higher in line with the overall weekly fractal structure, which is just the market structure of individual candlesticks. And as long as this blue line here is holding, I'm still looking for this overall sell for the buy up to hold, which we tapped into, and to push the market up higher to take out the overall trend line liquidity here on the weekly, which is resting above these highs. So this is kind of like the trend line that I'm looking at the moment. I'm looking for the market to still spike above it before seeing any like real sizable retracement on EURUSD. Now, looking here at the daily time frame, we can see that the daily fractal structure is also still in control. This is your daily fractal low and this here is your daily fractal high. So we're bullish in that regard. Also, if we were to refine the overall area of daily demand, you can see that daily demand on these 2 weeks is still in control as well. And also on the 4-hour time frame, we can also still see that the 4-hour fractal structure, which is from this low again into that same high over here, is also still bullish. Now, we've made sizable retracement in towards discount pricing, so underneath the 0.5 fib, so therefore it still makes sense to push up higher. The only thing that I'm still taking into account is that we have these equal lows. The highest probability trade would definitely come if we, for example, would see a reaction to this supply, one more push down, and then, for example, a change of character on this high, we form a fresh area of demand, and then look for more potential longing opportunities. Like, that would be the highest probability play. But if we do already start breaking this high over here, then for me, like, it's guaranteed that we're probably going to see 1.12 finally get hit on EURUSD. No financial advice, obviously. So still looking for further upside on EURUSD, despite or whatever. If we do still push down lower first, then I'll be looking for longs. And if we already start kind of like creating that overall internal order flow at this point in time, I'm also still going to be looking for further longs because I still see the dollar as bearish. And I have some squares and lines drawn here on my chart. And if I just zoom out real quick, what I want to show you here is like the AMD play that I'm looking for on the dollar index from a weekly perspective. Here we had a long period of accumulation before Trump became president. He becomes president, we see the manipulation, and now I'm just looking for the distribution in towards the downside. And we saw this exact same cycle happen back in 2016, again, when Trump became president for the very first time. Accumulation, manipulation, and then again distribution in towards the downside. So I'm looking for the same play. I'm still looking for levels below 100 and for 99578 to get hit as well, which is the lower dotted line on the dollar index on the weekly time frame. Looking at the 4-hour time frame, the immediate market structure here on the dollar is also still bearish. Obviously, from a swing perspective, we retraced into premium pricing, and I'm now looking for the further downside. The only thing that needs to happen now is for us to break the blue line, because at this point in time, this here is your 4-hour demand zone here on the dollar index. So it could kind of like give us a short-term bounce. If we break that blue line, then for me, like, this low is going to go, and we could see some further upside on EURUSD and finally get that 1.12 hit. Now, what I need you to understand is that this market is driven by fundamentals. We can analyze it based on technicals, but at the end of the day, if Trump decides to announce that whatever tariff he's going to be imposing, or whatever trade war he wants to fight next with whatever massive country in the world, this can cause the markets to shift, okay? Because what we have been seeing now within the market since yesterday, as of that announcement that there was going to be a delay on tariffs, is a shift from a risk-off bias, which was in the days before, right? There was a lot of uncertainty,
who's going to be hit the hardest, what is going to happen to the world. We saw a dump on those risk on pairs. So NZD, NZD, AD, and the Canadian dollar were weak, and now you see as soon as he announces a 90-day delay, we see what? We see strength from NZD JPY. We see strength on the Australian dollar. We see strength on, for example, USD CAD as well, where USD CAD was pushing in towards the downside. So it just shows that it's really a fundamentally driven market, and that's also how you need to approach it and understand, okay, is the current bias risk on or risk off? And a good example of that is, for example, here. And let me see if I can find the article straight away. But what is important to understand is that in China at the moment, they are planning to push a stimulus package, okay? And this stimulus package, and I'm pretty sure it's here on the main page, or if it's not, what China's going to do is that they're going to impose a stimulus package, and the stimulus package is based to, or is designed to boost the Chinese economy, which will in turn really benefit the Australian dollar and the New Zealand dollar, which are close trade partners of China itself. And also if we look at the Australian dollar against the Swiss franc, you'll also be able to see that that's decided to push back in towards the highs. Now the overall rally in towards the downside on ADCHF started last week Wednesday here when the initial tariffs were imposed, obviously went into a risk off environment where the Swiss franc and the Japanese yen became extremely strong. We've seen a push all the way back down actually for a week in towards last night, and then as soon as Trump announces that delay, boom, we reverse back up higher on the Australian dollar. So that's how to trade with the fundamentals overall. Now obviously you can see kind of like nice liquidity grab, and then 0.5 fib also getting hit, maybe a 4-hour fractal low break for some potential shorts again, but it will all depend on the overall bias that's going to be imposed. Now looking at the Australian dollar against the US dollar, what I want you guys to see here is that on the higher time frame, we're really at a key level. If you look at the monthly, we can see that we're really at those all-time lows here on AUDUSD, and a bounce up higher definitely does look good. Looking at the daily time frame as well, we can now see that the market is bouncing back in towards the highs. The immediate kind of like push up here has been very, very nice. What we saw here was a liquidity grab, and now this here is your area of demand, but the immediate order flow and immediate fractal low is this blue line over here, and this is now kind of like your demand zone. Preferably I would see a little bit of a spike lower, maybe in towards that demand zone, and then just look for the order flow shift again before looking for any potential longs, as you'll then also be trading at discounted prices. But then again, do keep in mind, guys, like the market is now driven just purely by these fundamentals. If China now announces, okay, the stimulus package is going to come out, it's going to be the largest stimulus package, and the stimulus package is just pushing money into the economy, it's going to be the largest one that has ever been seen, then obviously AUDUSD is going to push to the absolute moon. If it does not come out, then AUDUSD will just simply push down lower and lower. But for now, the immediate market structure on the fractals is looking good. The overall sentiment is definitely risk on, and these kind of like things can push AUDUSD up higher. It's now sitting inside this 4-hour demand zone, so let's see if this pushes the market up higher at all, and otherwise just wait for this demand zone to get hit, and then again look for the 4-hour change of character to look for some potential longs. But at the moment, the risk on bias is what is controlling the market, and if this does change, I'll let you guys know within Discord. Potential longs on AUDUSD for now with the sentiment shift. Going into GBPUSD, we can see that GU has been pushing up higher, pretty much in line with what we've been discussing. Remember, overall, the market structure is bullish from this low in towards this high, and then we made a nice retracement in towards this area of demand over here. Now, the market never needs to retrace exactly into that 0.5 fib. 0.5 fib is more just like a zone, and we've pretty much retraced into that. So looking for a rebound on GBPUSD, and that is going pretty well. Remember, at the beginning of the week, on Monday, we did discuss that we swiped this low and that we then saw the change of character, and this demand zone has now has been pushing the market up higher. So still interested in some further upside from GU as long as the overall immediate order flow remains bullish. For now, the 4-hour fractal structure here has this demand zone in control, and I'm expecting some more upside on GU as soon as we break this blue line. I'll be looking for some more upside from that, because I still see the dollar as weak overall due to the uncertainty surrounding the United States and obviously President Trump. He's very unpredictable, and big money doesn't like unpredictability, and therefore I'm still looking for further shorts on the United States dollar. Heading over next into NZDUSD, we can see very similar to AUDUSD that has been pushing up higher. For now, the immediate kind of like market structure that is in control is the 4-hour fractal. That is this demand zone over here. You can see a tap and a tap out again. Looking for continuation plays still up higher. in line with what I exactly said on AU as well. Here we've swiped the lows which grab liquidity and now looking for continuations upon the V-shaped reversal. As long as this risk on sentiment changes or stays, the overall long bias on NZD still makes a lot of sense, and it doesn't really make any sense to be shorting NZD right at this point in time, because this market, what you need to understand is that it's fundamentally driven at the moment. The overall driver of the market is not just the technicals, it's really just purely the fundamentals. So you need to be really in sync with what is happening within the world overall. Because again, if China just announces another stimulus package, it will also push the New Zealand dollar up higher and higher. So that's what you need to understand. So still looking for NZD longs as long as that kind of like sentiment stays here. And again, if it does shift, I'll be looking to share that inside Discord. But for now, longs still make sense either from here or from here. So keep an eye on that. I think NZD is pretty heavily oversold. Again, everybody getting stopped out with this kind of like low sweep over here. So some further upside makes sense as long as the current sentiment remains. And then if we look at gold, last of all, we can see that gold came back down in towards the lows to swipe liquidity, obviously here underneath this dotted line, kind of like this trend line as well. Now, overall, the longs have started to make sense ever since we broke the 4-hour fractal high. Going into the 15-minute time frame, this is a setup that I was actually discussing yesterday with Rucker, is that you had an area of demand, for example, over here. So this demand zone was over here. Then inside that demand zone, you had a liquidity low. And then what happened here is a change of character high over here. That was a change of character high that broke this low. Then what happens, you see the market structure shift up higher. This is then your area of demand. We tap into that demand, and from there we see another push in towards the highs. So these are kind of like nice setups that you can take on gold, and there was a nice setup that played out. I'll be continuously looking for further longs on gold. When it comes to commodities itself, look at, for example, US oil as well. US oil is currently retracing and pushing back down a little bit lower. It did see a nice shift overall, with now pretty much this being your 4-hour demand. So keep an eye on this demand or on this refined demand zone for some potential further upside. Oil has taken a big hit, obviously, with the expectation that there was going to be a global recession, or there is still expectation that a global recession could come. Thanks to uncertainty, but this overall, let's say anticipation, because obviously the markets are kind of like pricing in future expectations, right? And if in the future the market expects there to be a recession, that would mean less global economic output. Less global economic output would mean what? Less required, or less, less production, less less demand, less supply within the world. The entire economy starts slowing down, so it's just simply said going to be less production, and that would need, or that would require, less oil, and therefore less demand for oil causes the price of oil to go down. As simple as that. Very quick and simple maths. So keep an eye on that. If there's anything positive, again, US oil will continue to push up higher. So if there's anything positive about, we're coming back to terms, no tariff war, economic growth, this can cause US oil to push up higher. Keep that in mind. I just wanted to discuss that. So again, you guys understand the overall fundamentals behind the markets and why US oil saw a big push up yesterday. So that's it for today, guys. Thanks so much for tuning in. We're going live for the New York session here on YouTube, so make sure to stay tuned for that, and I'll see you in the next one.